I was always an analytical at heart, and I have a lot of creativity in me, and I think those fed to helping get into this space. HR isn't, a prime nurturing ground to become a LP investor, that's for sure. But you don't have to be a financial advisor to, have that experience. I just had curiosity and creativity to go learn and find out more about this space.
Welcome to the Freedom Point Podcast, where we talk about time freedom, passive investing through real estate, finance, and mindset. Let's dive in. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer. All right, welcome back. Thank you again for joining another episode. I have a wonderful guest with me again today. I've got Chad Ackerman. Chad, welcome to the show.
Thanks, Jeremy. Appreciate you having me on. Looking forward to the conversation today.
Yeah, likewise. Chad coaches successful professionals who are new to passive investing. He has over 30 years of experience with corporate leadership and some successful proven tools, which I'm excited to dive into here on today's episode. Chad really combines real world business experience with personal investing lessons to help clients create time freedom. So that said, Chad, I know a lot of guests on my podcast have heard, things like time freedom before and, different investing lessons. And that's really honestly why most people, tune in and listen, to the On the Rise podcast. So maybe you can fill us in a little bit more about, yourself, your background, your journey, what you're focused on today, et cetera.
Yeah, no, great question. And time freedom is definitely a part of my journey. I was a career W 2 guy. I was in human resources most of my career in focused on compensation and enjoyed my work, enjoyed what I was doing. But I started, later in my career looking for other opportunities, other options, trying to find that time freedom logic again. And that's when I stumbled into real estate, chased a lot of shiny objects trying to figure out what to do in the industry because there's so many things, and found a local meetup here in Columbus, Ohio, where I'm based out of. Met what turned out to be my business partner later in life, Jim Pfeiffer, because he talked about investing passively in real estate, helped him leave his W 2. And that was kind of the switch that flipped for me of, oh, there's something I can do that I can scale, and it won't take all my weekends and evenings, and I won't have to be a landlord, but I can get into real estate and I can stay in my W 2 at the same time. And it worked really well, that I ran with it. I liked it so much. I liquidated my 401k when I realized, like, this is my avenue to go. I don't recommend that to everybody, but it was my journey. But that gave me enough influx into the system that then I had enough passive income coming in, giving you the real short version here, but I had enough passive income coming in that allowed me to go back to my W 2. They had done some layoffs, and I said, hey, lay me off. Like, I've been transparent with them. I'm short term. This other thing is working out. I'm ready to go. Fire me. I've never negotiated to be fired before, but I was able to do that because of the work I had done with real estate in the passive investing side of things. Unfortunately, I was in such a niche focus of sales compensation, specifically in HR. They're like, we need you. We can't get rid of you. But I was able to negotiate down to working 1 day a week instead and run with that for a while. So that time freedom played a big part of why I did what I did in my journey. It's exactly why I try to go out and coach people about this now, to say, hey, it's tangible. If a guy from HR could do it, then anybody can do it, kind of thing.
Yeah, no, I appreciate that. And I'd like to dial back into kind of that transition, from corporate, the W-2 to, kind of that transition to passive. But before we do that, was there a particular deal that, you and your business partner, had identified early, as kind of being that turning point, that launch point, into real estate? Were you more so on the active side, passive side? Walk us through kind of that, that you're dipping your toe in the water for the first time. What did that look like?
Yeah, so it started with a conversation with a colleague at work, actually at my W 2. She mentioned that she was, give credit, Michelle. Michelle was mentioning to me that she was looking at different alternative income streams, and real estate was one of the things she was looking into. And that kind of triggered with me as well. But I'm like, oh no, I really like real estate also. Let me go study it. And at the time, my commute was about 45 minutes. So I had a lot of windshield time that I started listening to podcasts. I found Bigger Pockets. I found the real estate radio guys, and I was listening to their programs, and it just kept feeding the juices in me. That then I started listening to books, audiobooks like Rich Dad Poor Dad behind me, and other books that just gave me more knowledge about it. It was very single family focused when I started, and I was trying to figure out how to scale as I ran my models of how am I gonna have 100 doors and being a W-2 and raising small kids. How do I make this work? And I think a lot of people struggle with that. And there's systems and there's processes, and that's great. I was daunted by all of that to try to build that entity. And through Bigger Pockets, I found a local meetup here in Columbus that was single family focused. Jim happened to run this program that was there, and he got up to speak after I had attended 4 or 5 of them and talked about him leaving his job because of passive investing. And we asked a bunch of questions, and that's when it was triggered like, "Hey, there's something I can scale because I don't have to lift a hammer, I don't have to vet the tenant, I don't have to deal with termites. I can scale in that space, but I get all the benefits and the perks of real estate." Like, this felt like the real tangible thing to me that I cornered Jim. I'd been studying single family for 2 or 3 years, and I never pulled the trigger on and investing in any of them. I talked to Jim. I got excited about the passive side of things. I fell in love with a deal in Cleveland, Ohio that was a 17-story office building they were converting to apartments, that I'm like, "No, this is what I wanna do rather than the single family thing."
Yeah, no, I appreciate that. Your background and my background are very similar to one another. I was in a similar position in my own life back in 2015, after I, had been, in a 20, year career in the technology sales space, actually in the HR industry. So that's an interesting topic of discussion, perhaps there. Yeah. But I found myself in a similar position where we were, active fix and flippers. We had a few single family, homes under our belt, and we were looking to grow and scale it. But I actually chose not to continue to pursue active real estate ownership because we doubled down on kids, and I felt like the safer route, was just to stick to grinding after the commissions and the bonus checks, instead of the risks associated with taking a bet on myself. But then I had that same exact opportunity, just 3 years ago, where I still had the active W-2, but I was building up and scaling up a boutique, private equity, real estate company, raising capital for other operators. And this time around, I chose to exit the W-2 and pursue, the life of real estate ownership. I kind of, in reflection, looking back, I wish I had probably made that decision a lot earlier, but, I did what I did. So I'm kind of curious to know, that transition. I got to believe that there was some limiting beliefs, there was some fears, involved there, because you're walking away with, for probably full benefits, right? I mean, you were the HR benefit guy yourself, right? So you're walking away from the benefits, you're walking away from the consistent, W-2 income. How did you kind of get over that, mental mindset, or eliminate those fears you had?
Yeah, and that was a struggle. I mean, that is a tangible fear to have in that situation. I was at a point where my risk profile was structured that let me take this leap. My kids were kind of upper teens, early 20s. I had their plans kind of figured out and mapped already, so I didn't have to worry about that as much anymore. I was single at the time, so that afforded me more flexibility and not have to convince somebody else. The benefit side of things, somebody said to me like, "Well, okay, if you ran a business and I told you you had to put 12 grand a year into marketing, would you think that was okay?" I'm like, "Yeah, that's probably low." And they're like, "Well, that's, about what private insurance could cost you." Now, that may be going up here soon, but that's what it was at the time. That I'm like, "All right, well, this is manageable. This isn't as big of a fear." So it was education. It was me going out and getting educated more about it to prepare myself to take that leap. And then just the planets were aligned right for me that I felt comfortable enough. And to me, it was always, I could fall back to the corporate world. I could go back to that if I needed to. I could go work at Lowe's if I needed to, something along that line if I wanted different stress. I saw enough flexibility to go ahead and make that move and take that leap and try it out. And I've been doing it now for, I guess I left my W-2 in 22. So it's been 3 years and I've been happy as I could be with it. There's different stress by all means. I have nobody else to blame but myself at this point, but I like that freedom and that flexibility I have now to kind of figure things out.
I'm Zach Haptonstall, CEO and co-founder of Rise 48 Equity. Our goal is to help you protect and grow your wealth by investing in large multifamily apartment buildings. We do all the work as far as sourcing these large apartment buildings from the brokers, doing all of the on-site management with our vertically integrated property management company, doing all the renovations with our vertically integrated construction company. We completely rebrand the exteriors. We will renovate the interiors to our full platinum level scope, which increases the value of the asset to get that profit margin for the investors. If you'd like to learn about how you can partner with us on these exciting opportunities, and go to our website and set up a call with our team.
I gotta believe that after 30 years in corporate leadership, that there's some transferable skills that you've kind of developed over a 3 decade long professional career. What specific maybe habits or frameworks from the professional world were able to help you directly succeed as an investor and now a coach.
Yeah, I think the biggest thing was picking up on networking skills throughout my corporate life. That was a big agent of mine that I had a lot of mentors tell me, get out of your seat, go meet people, go network, learn from them, learn from their mistakes, get on their radar to help, when something comes to light that they're thinking strategically, they're going to think of you because you've been talking to them. That translated very well into this space. One, we started a community called Left Field Investors at the time. That was all through networking. And we just wanted to build on networking and pull together like minded people to share their experiences. And all of us learn from that to become better LPs, limited partners. That all translated, but then that fed into also having that comfort level to network and vet operators to find the know, like, and trust relationships that you really need to have to be comfortable to invest in this space. So it translated through all of that. Now I think it feeds into me having my own independent business where I'm trying to coach professionals that might be interested in real estate on getting into the passive side of things because they don't have enough knowledge on it. All that networking is fed to me being able to be in this seat today.
Yeah, it makes total sense, and I couldn't agree with you, more there. And the cliche saying goes, your network is your, net worth, right? And so it's really and real estate is very much a team sport, so to speak, right? And so constantly, trying to look to level up, myself, as an individual contributor in the space, but also looking to surround myself, with other, people that, maybe are 1 or 2 steps ahead of me, that I can benchmark, in a way and call me up. So really appreciate that. And I know that you're, kind of coming from the HR space. I'm just kind of, curious to know your thoughts here. How did you really kind of navigate, I'll say the, technical and emotional, hurdles, to investing? And were there any, failures, that you experienced, early on that you've now been able to kind of, learn from your mistakes, so to speak?
Sadly, yes, there have been failures, unfortunately. But if you stay in this business long enough, there's going to be failures. I think I was always an analytical at heart, and I have a lot of creativity in me, and I think those fed to helping get into this space. HR isn't, a prime nurturing ground to become a LP investor, that's for sure. But you don't have to be a financial advisor to, have that experience. I just had curiosity and creativity to go learn and find out more about this space. And you get educated, get networked with people that are in the industry. Like you said, find people that are a couple steps ahead of me. I love the concept of the theory of your the product of the five closest people you surround yourself with. And I purposely tried to go find people that were a little bit ahead of me and get close to them. And that ended up being the partners that formed Left Field with me. So it worked. It made sense to me. It helped me quite a bit to get into that space that I think brought a lot of that transition out of the corporate world into what I ended up doing, that just kept feeding me. And it was the right thing. To your point, this industry is very open. I've never met an industry that people there aren't secrets here. There's so much to go around. People share their, hey, this was a home run for me story that helps me figure out who I want to invest with next because of the success that may not that it's guaranteed to repeat, but at least, I know they've had good times. That all of that just fed to me being able to be more excited about this industry, want to stay in it when we sold left field, want to stay in it and give back now and coach other people through care, because I want to stay in the space. I want to help more people find it because it's very limited how many people understand it. And it's not overly complicated. It's not rocket science. It's got its complications by all means, but I want to help them navigate and get started and get them turned on to it, because it really excited me, and I'm still excited about it to this day. So
Yeah, no, I totally appreciate, your abundance mindset, and you're exactly right. This industry, is probably one of the most transparent, industries that a person can get into, really. And so I really appreciate, that kind of abundance mindset, as well as, kind of the total transparency of the industry as a whole. Kind of given some of your, missteps in the past, in terms of maybe lessons learned in investing, how do you coach investors that, I don't know, maybe they feel overwhelmed because there's just so much information out there to learn, to get them to the point where, maybe they have confidence, taking that, first step, or maybe how do you coach and counsel people that feel like they're just, late to the game, right? The people that wish they had started, 2 decades ago, but, now they're getting into the game, maybe in their, 50s or 60s.
yeah, absolutely. And I didn't get started till I was in my late 40s myself. So I'm almost a case study, maybe not as a 50-year-old, but I am there now. But to me, honestly, the answer to both of those kind of questions that I get, because I get those questions, is let's start with your goals. Let's start with what your plan is and your strategy. And the I purposely try to spend time on this because I screwed up my first couple investments because I didn't have my goals really set. I just got attracted to the industry and the shiny objects and wanted to jump in. And I misaligned my first couple of investments because I wasn't really thinking through what am I trying to do with this space. So I start clients out with goal setting and let's spend time on it. And the purpose there is there are so many asset classes, there's so much noise in this industry, but certain asset classes are going to help or not going to help. It's almost a light switch. And knowing what your goals are you cash flow? Are you trying to build equity? Are you looking for tax deferment? What are your strategies you're trying to get to? Well, when you understand those strategies, you can cut out half of the noise. If you want cash flow, ignore every development deal that comes in your inbox because you're not going to get any cash flow out of that for some time. So it helps with just trimming down that funnel so that you can get a little more focused so it's not quite as overwhelming as it is. And I also say right now is a great time to get into this space and be a limited partner because there's been a lot of people get exposed over the last several years because the economy shift, the interest rates going up. They got caught not being prepared, not being conservative enough, not understanding their loan structures well enough that now they aren't in the business anymore. So we have fewer good operators that are out there that you can kind of sift through this a little bit here. These are questions you can ask. How did you do through the economy the last few years? If they're just starting now, well, that might be a little red flag. Like you might want to take some time learning them. But if they survived it, if they learned a lot, what were their lessons learned? That's a great question to ask. What did you learn from the last few years? Did they date back even to 2008 and they've gone through a couple cycles now? That's even better because they've really had some wounds that they've had to deal with. If they're still survived it, they're still going, that's probably a tangible person to look at then too. So to me, it boils back to goals is what I really try to spend time on, and understanding those goals just feeds into the rest of the conversation then.
Yeah, no, it makes total sense. I mean, I appreciate you highlighting the stage in which we're at in the in the current market cycle, right? I don't know that we can say with any degree of certainty on October 9th of 2025 that we're at the bottom of the market cycle, but it certainly feels like we're, dipping along there. We've got positive signs, coming from, leading real estate analytic companies like CoStar and others. Of course, obviously, is everything's, market, dependent, on the local, market perspective, and it's all up to the operator and the execution of whatever that, said business plan is. So there's a lot of different variables that go into that. But the good news is, for operators that are, continuing to aggressively, attack the market, now is a great time to be getting in, because you're likely getting in, to deals that, maybe are discounted, 20 to 40%, from what those, properties would have traded for, at the peak of the last real estate market cycle, which we know now, to be kind of that back half of 2021, early 2022 time period.
Yeah. Yeah, no, it's spot on. And it boils back to our saying of you're betting the jockey, not the horse. So you're really vetting the operator. You as a passive investor, we call you an active passive investor. You've got to spend some time up front, because once you write the check, that's when you kind of really become the limited partner, and there's limited things that you can do at that point. You're just along for the ride. So it's about doing your due diligence up front to understand, how is that operator performing? How have they gotten through? What's their history been like? What's their communication been like, to meet your buy box, your risk tolerance level. Your risk tolerance might be very different than the next person. So understanding your goals, your buy box really cuts out, to me, it cuts out a lot of the emotion. And then you've kind of get it to a black and white scenario. And emotion is what makes us make mistakes. So I try to cut out as much emotion as I can out of it by spending time on things like your goals and your buy box and so forth.
That makes total sense. And, fortunately or unfortunately, most people make decisions based upon emotions, anyways, even though they try to say that they're making decisions based upon logic and fact. But unfortunately, that's not how the human psyche is designed. But yeah, but kind of beyond that, what would you say to maybe that? I'll just say that maybe more analytical type investor, right? That's constantly plagued with kind of this analysis paralysis, paralysis by analysis, whatever you want to call it. What would maybe be kind of your, simple framework that you can help, make their first, help them make their first passive investment, more confidently?
Yeah, I will say, and it's hard to tell somebody and get them to understand and buy into it sometimes, but taking action is going to teach you so much more than all the analytics that you're doing. It's good to get the analytics in and have your comfort zone of how to underwrite a deal. Do you have to underwrite every number? No, you probably don't, but it that's very personal. That's very subjective to you, of what you need to feel comfortable with it. But it is that idea of taking action is going to do so much more for you. What I try to do to help, like we used to use TribeVest as a company of saying, hey, I get writing a $50,000 check, $25,000 check. That's, I still have a little pain every time I do it today. But there are other means that you could pool money together and invest with some group of people that are interested, and then you put less dollar, there's less risk there. If that's what it takes to get you over the hump to take action, you're going to learn so much more by investing in that first deal, seeing how it works, see how the communication goes, see what funnels through from distributions and refinances and sales eventually. That is going to be so much more educational for you. It's, let's find you a way to feel comfortable to take action on the first one. When I wrote that first check, I was nervous and scared and did it, and then I was ready to write the next one. I got so excited about it. I'm like, "Oh no, this feels great. I'm getting it a little bit more now. I want to go do this again and find that next one and keep pulling." This is what led me to liquidate my 401k. So be careful with it.
Yeah, no, I appreciate that. And you're exactly right. It's so interesting that you say that too, because I always tell investors, back in 2015, when we pivoted from active to passive, that first passive limited partner investment that I made, I guess over a decade now ago, my strategy was hold my breath, plug my nose, right? The one thing I knew is I knew that I knew, I liked, and I trusted the main operator. However, the flip side of that is there's a lot of people in my life that I know, like, and trust, but would I trust them with managing a 50 or $100,000 investment of mine? Probably not, right? So there's kind of more to that story, if that makes sense.
Yep. Well, and my answer to people is get involved with a community. Be cautious of groupthink, but community gives you so many other experiences to feed off of and educate yourself around and put into your buy box and bounce up against your risk tolerance to see if that feedback makes you feel better, worse, whatever, gets you to where you'll have good questions to ask an operator as well to get to a comfort level for yourself. But that community network, I think it's gold. I won't invest with an operator that's new to me that I can't go into my community and ask, "Hey, has anybody heard of Chad Ackerman General Partner before?" And if everybody, nobody responds or people say no, then I'm going to pause on that because there are enough people in the communities that I'm involved in that I don't want to really take the flyer on trying to be the guinea pig to try out a new operator myself. I'd rather wait, watch, see. Doesn't mean I'll never invest with them, but I'd rather give it time, see their performance until I can get some word of mouth or seen enough of their experience myself to feel comfortable to move forward. But the community thing, it's huge. I'm partial to it because I loved left field. I loved what we did with it. But I see the benefit out of it too. There's just so much help that comes from a community if you can sift through and find what you need out of it. But that's the perk of having a lot of opinions there is to give you a lot of feedback to kind of sift through.
No, that makes total sense. I'm a big supporter of iron sharpens iron. So definitely see a lot of value in that kind of community, aspect. In kind of closing here, I'd like to get maybe your feedback or your opinion on, kind of your personal playbook for networking, with intention. How do you go about, building real trust with people as opposed to just chasing after connections?
Yeah, it starts with just being genuine. That's luckily one of the things that I don't know how not to be anyway, if you will. Maybe that doesn't sound genuine to say. I don't know, but but it's be yourself. Like to me, from what I've seen in this industry, everybody just gets excited to talk to one another about this space and that feeds me and gets my drive going as well. That's why I continue doing what I'm doing. But it's just come and be open and ask the questions, but be willing to give as much as you take as well. That's a big part of it all. Provide something back to them, your own experience, your own ability to help analyze whatever it may be. All of that just opens doors to connect with people in this industry, and they want to connect with people anyway. So it's a very open community that don't fight it. Just lean into it.
Yeah, well, I appreciate that perspective, and I think anybody in any different industry or walk of life can certainly apply those principles to their own, personal and professional, journey. So, with that said, Chad Ackerman, what would be maybe, one or two different ways that our, listening audience can connect with you to learn more about what you're up to?
Yeah, absolutely. People could go to my website, chadackermanrealestate.com, or find me on LinkedIn as well. I'm out there quite a bit also. So either of those places work great.
That's great. Well, we'll put those links in the show notes for the episode. Chad, really appreciate the tremendous value that you brought our listeners today.
Oh, thank you, Jeremy. I enjoyed the conversation. Great to connect with you.
Yeah, you as well. And podcast listeners, thank you again for jumping into another episode. And we look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting.